Bloomberg Economics says the surprise OPEC Plus oil output hike, economically baffling and politically loaded. Saudi Arabia slashed its flagship oil price by $2.3 a barrel for May following the announcement. So Ziad Daoud is Bloomberg's chief emerging markets economist and joins us right now. What a day to have you on. We're saying that, we're sitting here talking oil is about to test $60 to the downside. And it wasn't just tariffs that got oil moving. It was that surprise announcement out of OPEC Plus to bring forward, bringing extra barrels to the market. You don't think that was an economic decision, do you?
No, I don't find any of the arguments that says it was an economic decision quite convincing. It doesn't make sense when the market is moving the way you were mentioning is moving to add a supply shock to it. And these moves were not unanticipated. We all knew something big was going to happen on April 2nd. A big announcement was going to happen. It was already dubbed Liberation Day. And it was ought to add a supply shock to oil markets on top of it. And if you think in terms of profit maximization for OPEC Plus, yes, they may be producing more, and that may bring more revenue if prices stay where they are. But typically, prices move more than volumes. So whatever they gained on volumes, they lost on prices. And for them, it's a lost volume. If you think about the argument that they said, it's about punishing cheaters. Well, it makes sense to do this when prices are stable and high. It doesn't make sense to do that when your shock is drowning in a big demand shock that comes from sweeping tariffs from the US on the whole world. So I don't find any of these arguments convincing that there was an economic motivation behind the move.
So what is the motivation then, Ziad? Tell us. What do you think it is?
Well, if you look at the political sort of circumstances, there is a few things that may point that it was politically motivated rather than economically motivated. First, if you look at the two biggest sort of producers within OPEC Plus, Russia and Saudi Arabia, Russia is in the middle of negotiations for a Ukraine ceasefire, and lower oil prices play well in Washington. Saudi Arabia will receive Trump in his first presidential visit, and it's nice to provide a few lower oil prices ahead of the visit. Actually, hours before the OPEC Plus decision, Saudi Arabia and other Gulf states said that their bases and their airspace would not be used in an attack against Iran, and maybe that move was, to sweeten that announcement. So you have a bunch of sort of political announcements.
But okay, fine. I mean, I've heard that from other people as well, Ziad. But at the same time, they're also shooting themselves in the foot. Like, why would you accommodate so much to what Trump would like to see, which is lower oil prices at the pump, if it means that your own economy is going to pay the price? We know, because we talk about this all the time, Saudi Arabia have huge spending plans in the pipeline. As a consequence of lower oil prices, they will have to scale back. They're going to pay the price.
Let's talk numbers here.
Okay, let's talk numbers.
Let's talk numbers. So how costly was that move? Because bear in mind, there's also a few things are happening. There is a big demand shock that lowered oil prices to near 60, and that's unrelated to the OPEC Plus decision. And there is the supply shock from OPEC Plus, and the supply shock contributed about $1.50 to $2 to the decline in oil prices. So how costly is that $1.50 to $2 decline in oil prices? Saudi produces 9 million barrels a day, roughly. So that cost is about $5 billion if it persists over a whole year in lost revenue. What is $5 billion? Is it big? Yes, it is big. But put it in context. Trump is demanding $1 trillion from Saudi Arabia over his 5 years, and $5 billion over his 4-year term, and $5 billion could contribute to this. It is costly, but it's affordable. But one thing is important here. It probably cannot be repeated for the reasons that you've mentioned. Saudi Arabia needs oil prices at near $100 per barrel to balance, to meet its spending. $5 billion and lower oil prices does not help towards that. It might be a one-time gift, but it probably won't be repeated.